What is up, everybody? This is Stock Market Education, and today we're going to be talking about Uber and if it's still a buy at $40 a share, which it is right now on February 10th, 2020. So let's start out by taking a look at their SEC filings, particularly their 8K. When you look at the operations growth, you can see that monthly active platform consumers grew 22%, trips and booking grew 28%, adjusted revenue grew 41%, and adjusted EBITDA grew 25%. Looking at these numbers, it's very obvious that Uber's operations are growing at a pretty impressive rate.
When looking at the growth by segment, you can see rides grew 18%, followed by eats at 71%. Yes, I was surprised too. And freight at 74%. Uber has grown at a fast rate, especially the eats and freight business. Uber will continue to grow bookings for the foreseeable future. Overall, last week's earnings reports were pretty average. I wasn't surprised by it, and I wasn't unimpressed by it. However, the CEO, Dara, said in their earnings call that Uber was going to be profitable by Q4 2020, which sent the stock price up 9% to $40 a share, which leads us back to our original question, is Uber stock a buy? When you look at Uber, you can see Uber's market cap is at $68.6 billion, which is $15 billion less than their IPO market cap of $83.8 billion. This shows that Uber is trading at an 18% discount from its IPO price, making it very reasonable to buy. But that's not even why Uber is attractive to buy at $40. It's attractive to buy at $40 because Dara made a future statement saying that Uber will have positive EBITDA a year earlier than expected. Uber is in a transitional stage, going from losing money to making money, and the CEO expects 2020 to be the last year of losing money and 2021 to be the first year of making money. Dara said in the earnings call last week that Uber will eventually have a cost structure that allows EBITDA to be 55% of revenue. Now, this is probably the most important part of the entire video. Although this would never happen, let's just assume that Uber stops growing. All this crazy growth that they have just stops. Let's just assume that. Even if all growth stops, Uber will have a $2,051.5 million bottom line. This is assuming that Dara is correct about the cost structure, which is about $4.7 billion more than their current EBITDA. When you do the math and look at the numbers, it's clear that Uber has a major growth potential and strategy over the next 2 years.
Things to look at this week: Lyft is reporting earnings tomorrow. They're expected to lose $1.22 per share. If they report good earnings, then it'll show that ride sharing is a fast growing market, which will help Uber's case. If they report bad earnings, then it will demonstrate that Uber is in a better position in the marketplace. Either way, I'm happy. Uber's my biggest position with an average cost per share of $37. And that's it. Bye.